Hello there, and welcome to Client First Strategies. Be the boss of your money, where you come to learn about finance, about personal finance, investing, business, and relevant topics such as business development. We have a good time here. I give you the real scoop, I give you the perspective. What's going on with markets? What's going on with personal finance? How to hack your personal finance, and just basically make sure that you are the boss of your money, not your money becoming the boss of you. It's very easy for that to happen when things like debt, credit card debt, lack of savings, lack of an emergency fund, it becomes a problem. It's very easy to fall behind financially, and you want to make sure you keep ahead of it. And there's a few things that you can do consistently to make sure that you stay in good shape so that you could become the best version of your financial self. You like that? I like that too. Today's story really is just a theme of the market. We are churning around more or less at the peak, at a new high. Can't quite close there, and it's starting to feel like maybe a little toppy. Today was a strange reversal, how you just had such a bad day for the V-shaped recovery stocks and a really solid day for the tech stocks. So we're going to talk about and see if there's a big change coming around, if it's time to see if there's a deflection in the market. What else? We're going to talk about some odds and ends. We're going to get into a little bit of politics. Ooh, you said politics. Ooh, you never talk about politics. Now, you know what? You have to talk about it. It's part of the investment process. I'm not here to change minds. I'm just going to give you some facts. Got to go over some facts. And I'll talk to you about why are we spending so much time looking for the hot stocks of the day. That's what people are looking for. I get that. It's fun. But if we spent more time just practicing good financial habits, we would be way better off over the long run and probably the short run too. So let's roll the quick intro. We've got a good show coming up. I'm just packing a lot of stuff in here. A lot. So stick around. I would love to hear your questions during this live stream. If you're watching, ask in the comments. If you're watching in the replay, welcome to you as well. Hit me with your questions. Here's the intro, and we're going to get into the good stuff. Stick around. All right, we're back. Thank you very much, everyone, for joining me. I really appreciate it. I see a few people out there. I see Jean Pasqua, Mary Beth, Lori Baumer. Thank you so much for being out there, guys. I really appreciate it. Can you see this? There. Boom. That's to you. Yeah, I am just like so animated today. I've been drinking more water, a lot more water. I think because I've been drinking more water, I have a little bit more energy. Is that possible? Let me just fix my screen there. All right. You like the studio background? So here's the deal. We're going to go through the quick update with perspective because I always give you perspective. Anyone can tell you the Dow was up, the Dow was down. Who cares? It's day-to-day stuff. What we need to see is why, what's going on. Is there a change? Is it worries about politics? All these things. Okay, so here we go. We're going to do a quick share screen. Ooh, that sounds really nice in the microphone. By the way, I'm using a Blue Yeti microphone. It's just a fantastic microphone. It's the popular microphone that all the cool YouTubers are using. So, I'm living my two younger kids' dream of becoming a YouTuber, becoming an influencer. I'm like living the dream. To them, they're like, wow, I don't think they say, wow. I think they go, oh, big deal. But then I, hit the kids up with all my social media knowledge with like funny expressions. And we have a good time. The Dow was down 86 points. The S&P, just about flat, up a slight bit. But the NASDAQ up 1%. That is a pretty big reverse of what we've been seeing the last 2 weeks or so, where you've been seeing the reopening, the economy reopening, re-engaging stocks start to pop. The hotels, the casinos, the consumer discretionary, the industrials, the Boeings of the world, for example, airlines. Today was not a good day for those stocks. Today was all back into technology. So what gives? Are people all of a sudden worried again about a slowdown and COVID? The VIX was down a little bit. See that? The VIX. When the VIX is down, that tells you that the big money managers, the professionals, like me, like yours truly, the big shots, the kings of the universe. Okay, just kidding. So, the VIX is down a little bit. So it doesn't seem like there's an awful lot of worry, because usually the VIX would be up if there's a lot of worry. But the VIX continues to go down. 25 is a magic number. Pretty soon we could get down to 20. If we're under 20, that really confirms like how strong this rally has been. It would really confirm to me. It would confirm to me some level of sticking power. Okay, so just want to tell you that. Hey, we got somebody out there. What's up, Andy Randazzo? Man, if I had your name, I would just be like so cool, Mitch Randazzo. I mean, Andy, you're a pretty cool guy. Good to see you coming here from LinkedIn. You got to go check out Andy Randazzo. Andy Randazzo has been my guest on this show also. Check him out. He is on social media all over LinkedIn. He's a marketing guru. He knows this stuff. He's been like a marketing guru before, like you had marketing gurus. Yeah. All right. So let's take a look further down the line. Next slide. This just came out, and this I think is one of the reasons why industrials, the reopening stocks aren't doing so hot, but the stay-at-home stocks, work-from-home stocks had a really solid day today. University of North Carolina shifts in-person classes to remote learning after coronavirus outbreak on campus. I want you to know, University of North Carolina, they started their classes last week. So to have the students go there and all of a sudden do this about face after they're there, I'll tell you what's going on. 30,000 kids there. COVID-19 positivity rate jumped to 13.6% from 2.8% the week before. That's a huge jump, and that is a very big positivity rate. Once you're over 5%, that's like, community spread. Not like it is. It becomes community spread. And the thing is, you're going to start seeing stories like this, like what's going on with University of North Carolina, all over the place. You're going to start to see this with public school districts. You're going to see this with universities, especially with universities. Like Florida and Texas had to shut down the bars because the young people are running out to the bars, congregating, not social distancing, and it's spreading. Well, I mean, what do you expect that would happen at a college when it's predominantly 18 to 22-year-olds all together and having faith? I went to college. It's fun. It's a lot of fun. So I think we're going to see stories like this pop up all over the place. And when we see enough of them, it's going to start to look like a setback. And then what do you do with the states? I could tell you in New York, they just opened up bowling alleys today, only 30% capacity. Next week, the gyms can open up in the state of New York. I'm pretty excited about that. But it says that they have to have the proper ventilation and the right equipment in place. I have no idea if my gym actually has the proper ventilation. It's like a big box building, and it's really pretty. It's decorated really nice, but I don't know if they have like the right social distancing ventilation, and are they going to put plexiglass between the machines and everything like that? The S&P story of the day. S&P keeps bouncing around its high, and here's the thing. The big theme of the day is how the S&P just does not break convincingly through that all-time high. You see that little line there? It kind of like it's like the all-time high is the dotted line, and it's acting like a ceiling against the S&P 500. And if you don't see that convincingly break out soon, it's going to start to look like a failed attempt. And then you have to think that the market takes a change in direction. So we could go either way now, but the longer it takes to break through that high, the longer, or I'd say the worse the technicals are going to start to look. So can we do it or not? Time will tell. All right. Next thing, gold up. Big rebound from last week. Gold had a big rebound. Silver had a big rebound. Precious metals had a nice rebound. And that is reflects a degree of uncertainty, and kind of implies the stay-at-home stocks are backed up by gold. Gold, people are worried. Okay, the Fang stocks, Fang M, Facebook off a touch, Apple off a touch, Amazon off up a little. Not bad. Listen, 1% is not is a great good day. Netflix off, Google, Microsoft. It was an okay day for the Fang stocks, but when I look at my overall tech stocks, let's just take a look over here. Tech stocks were the third best gainers of the day in terms of sectors, but since tech stocks are the biggest sector in the market, just by being third, it's like being first, because that third place has a much bigger impact on the overall stock market than the XLY, the consumer discretionary. What you're looking at here are the exchange traded funds, the spiders from State Street, the select spiders sectors for each major sector of the economy. So today, discretionary, real estate, but they were up at technology, healthcare, consumer staples. At the bottom, it's like the worst thing you could see if you're looking for like an economic recovery story. Financials, energy, and industrials were at the bottom of the day. This is why the Dow is down and the S&P was barely up, because the industrials and financials were weak today. And that implies that, if you just a quick snapshot that, hey, people are worried about the economy. That's what this is a snapshot for. Okay, let's move on to the meat of this live stream. I'm going to just sit back, relax. If you have any questions, by the way, I'm a little get me in focus. A little fuzzy. Or you can hear me fine, but come on, camera, do your job. Okay. So anyway, such as live streaming goes. So, okay, we're getting focused. So just some odds and ends. We've got some notes over here. I could write like for the CIA. You wouldn't even be able to crack the code because my handwriting is so bad. But all right. I'm going to talk about a couple of things. Hot stocks, first and foremost. We're spending an awful lot of time focusing on the hot stock of the day because it just seems like there are so many stocks taking big runs, and you get the feeling like, everybody's making all this hot money. And if you could make pick a couple of hot stocks and make some quick money in the market, that'll set you ahead in your finances. You could go years ahead. You could take a big leap by making all this quick cash in your brokerage accounts, your IRA, your Robinhood account. I see hot money come and go, and usually when it goes, the hot money just doesn't stay. I remember Tilray, the big pot stock, went up to like $600 and down to like 10 or 9. Bitcoin had a crash. I know it's resurgent as of late, but we saw what happened to that. Kodak was a huge winner, up to 30 or 40. Now it's back down to 7. I mean, just the whole thing with Kodak is just like the stupidest thing that I've ever seen. And then I want to show you something real quick on the front cover of Barron's. Barron's, the financial newspaper. You see that? Okay. That is the market's new gamesters. So, it used to be that when you see a bull on the cover of Barron's magazine, that was the sign that a bull market is at a peak. Could we say that the replacement for a bull is the Robinhood app on the front cover of Barron's? And it talked about basically how Barron's, how Robinhood is made trading more like a video game with such a great, easy use interface. I am more for new people coming into the market than against all of the other stuff going on. The other stuff meaning speculation, gambling. You have to learn. I always say it's okay to trade and have fun in the Robinhood app as long as it's a learning habit, not a gambling habit. And maybe we are creating a generation of gamblers with the Robinhood app. Time will tell. But if we do create a generation of gamblers, I don't know how we shake that off. So people looking for the next hot stock, but I've seen more money lost looking for the hot stock than anything else. There's a few things that I've seen people lose a lot of money for, but that's one of them. Over time, the thing that works for you for creating wealth is managing your credit score. I think I heard Dave Ramsey. Yes, he said it in a video. I happen to be a fan. I like most of his content, but he said having a credit score means you love debt, or you're in love with debt, or you're good. You want debt. It was something. It wasn't such a great affirmation of having a good credit score, but to me, having a good credit score means you're good at personal finance. You're paying your bills on time. You're not overextending yourself with credit cards. You have the right kind of debt, like a mortgage debt, as opposed to a credit card debt or a consumer loan. And, I think managing your credit score is really, really important. We're going to talk about ways to raise your credit score and things to, mistakes to look for on your credit score at a later episode. So that is but watching that and becoming an expert in your taxes. I wish someone had told me this, much earlier in life, but part of wealth management, financial planning is managing your taxes. We talk about our expenses, your rent, your mortgage, your living expenses, your car, your insurance. We have a lot of expenses, but usually when you start making some money, your biggest expense is actually your taxes. And I feel like people are not really taught enough about how to manage their taxes, what your gross income is, what your adjusted gross income is, and what really is a legitimate tax deduction. What's the standard deduction? I don't think people know enough about this. So we're going to have to talk more about that as well at a later episode. But I'm giving you some food for thought here, that what builds wealth, okay? We're having trouble streaming to LinkedIn. View on LinkedIn. Continue. All right. Something happened here. I lost LinkedIn. All right. Hopefully we'll get back there. All right. Looks like we lost LinkedIn. That's kind of a bummer because LinkedIn is like the biggest part of my audience. Please check LinkedIn to make sure the stream looks okay. If this continues for a while, I'll try creating a new stream. This is what happens when you stream live. All right. So continue to LinkedIn. Make sure I'm streaming here. Sorry, folks. So the idea is we need to make sure that we are taking the corrective action in terms of making sure that we're doing the right things to build wealth. And some of those things are, saving before you spend. So before you get your paycheck, make sure money goes out of it to some kind of retirement plan or a separate savings account before you spend. You want to save before you spend, not save what's left over after you spend, because what happens is it doesn't happen. It becomes a matter of willpower, of not tracking things properly. It just makes it harder. You want to hack your financial life, good financial hack, save first, then spend, not the other way around. And then, that's it. I want to talk about tech stocks. People are really focused on the main tech stocks, the Salesforce.com, in addition to like the Amazons and Apple and Microsoft. But there have been some new other stocks that I am into, that I have client accounts in, that are not necessarily the same old stocks that have done well. So I just want to point these out, like UPS, ConAgra, Qualcomm. Yes, Qualcomm is a tech stock, but it hasn't moved yet until recently. And there are others also. But the point is, you could diversify and still give yourself plenty of upside potential over time if you're trading in individual stocks. So that's what I want to point out to you. It's not just a matter of always looking out for the hot stock. Spend your time on good personal financial habits, and that is really what will work over time. Looking for the hot stock, day in and day out, means you're taking your eye off the ball of the other things. And I'll bet that people who are trading are not doing the other things. I'm not making a blanket statement. It doesn't go for everybody, but by and large, develop good good financial habits when you're young will pay off much, much bigger than looking for a hot stock. And what happens is when you get a hot stock, you keep going, you keep going. It's just a matter of time until your odds go down. The difference between trading and investing, by the way, is the more you trade, the more you gamble, the lower your odds are of making money. But the longer you invest for the long term and the longer you practice good personal finance habits, like knowing about your taxes, the higher your odds are of winning, of accumulating wealth. So that's the story for today. This is just a quick live stream. Just wanted to throw some education in there, and we're going to get back to some more educational things over the next couple of days. I'm looking for some guests, and I've got a few lined up, so I'm very happy about it. And I will see all of you in a little. I'll see all of you tomorrow. I have to be somewhere by 7 o'clock. All right. Take care, guys. Thank you very much for tuning in.